Hello, welcome to this week's weekly market view for Monday, the 26th of December to Friday, the 30th of December 2022. My name is Vishal. Let's get started. All right, so let's start with the Nifty analysis. Let's start with the monthly chart. And as we can see, since the past few days, we have seen a little bit of a bearish momentum in the market. We had more or less gauge that we need to have a closing right above the all-time highs. Market did give a close above the all-time highs, but has failed to sustain, which means that the market has failed over here, and now markets are creating a bearish candle formation. So now this candle formation on the monthly chart is going to be very, very crucial, because if you look at the overall scenario of the market in the as the markets have gone up, we have never ever seen such a bearish candle. Maybe somewhere over here we did see that, and after that the markets did retest that area and did fall down. So it'll be interesting to now see how this candle closes. If this candle closes the way it is, then this is going to be a very, very significant area, because this is going to be more or less an area of monthly supply. And that's not really a good news when it comes to long-term investors, because this is going to be a supply zone which is going to be created on the monthly chart. Now we do have this level of monthly demand, but now because we are in this bearish candle formation, more or less it's likely that the markets might move all the way down over here and might test this level a little bit more deeper. So 17,500 to 16,763 is a level to watch out for on the monthly chart. But traders also need to be a little watchful on 18,135 to 18,921 to the upside. Let's move on to the weekly chart. And if we move on to the weekly chart, we did have a weekly bearish closing. Let me just remove all the tools here. And now we have this area of demand which is in play, and it will be very, very interesting to see whether this level of demand holds or whether it breaks. And if by any chance this level does break to the downside, then we are going to have a new weekly supply on the charts over here, which is more or less going to be something like this, which is also coinciding with the monthly level of supply. And then if that happens, then probably we might have to move towards the lower areas, which is this drop based rally over here. So things are looking a little bit more bearish right now, at least in the short term. The longer term, the Nifty is still bullish, but in the shorter term, the Nifty is slightly in a little bit of a correction mode. So we just need to be a little bit more watchful. Let's move on to the daily chart now and quickly gauge what the daily chart is looking at. We're going to ignore this candle because this is just a double candle here. So we'll just more or less focus on this area. And if you want to try and fine tune the supply zone, then this is going to be a very, very important level. So I'm just going to just fine tune this level somewhere over here. This is going to be your drop based drop area of supply. So any kind of corrective move to the upside, and let's probably show you how this might just look. So if you just wait for the prices to pull back from these areas of demand, it's very likely that prices might again go back into this area of supply, retest this supply, and start falling down again. So again, this is just going to be a market which is going to be waiting for some moves to the upside, but there is more selling pressure that is likely to come in this market over a period of time than any kind of buying. The levels of demand are way below now. We do have this area of demand which is right in the middle over here. This is one area to watch out for in case if the prices do gap down or do come into this area eventually. We have this weekly demand zone area also playing out right now. So these are going to be the key levels to watch out for. But as I said, that in case if that weekly demand zone does break to the downside, then we might probably go back to retest the origin of this level of demand. So we are more or less seeing 17,000 levels being retested again in case if the market just continues to keep going down for any kind of news in the market or any kind of bearishness in the market. These are the levels to watch out for. So Nifty is going to be more or less playing in this range now, 18,267 to 18,491. If it does break this range, then obviously we are moving again back closer to the all-time highs, but doesn't seem like that is going to happen, and we might continue to see a fall coming to the downside, and it could be a pretty stringent fall where we could see 17,000 levels being tested back again. If you look at the volatility, generally when the markets are going down or they tend to gap down, we see a rise in volatility, and we are seeing that spike which has been happening on the Nifty right now. It's the same case in the bank Nifty as well, where we are seeing a spike in the volatility. We might expect to see rise in the options premiums in the days to come if the prices does keep on falling down, and option premiums might tend to become more and more expensive. Right now option premiums are cheap, so again any kind of bearish strategies such as your debit spreads or your calendars or your diagonals could play an important role in this kind of a market situation. Let's look at more with an intraday perspective to gauge if there are some key levels of supply and demand on the intraday chart. So on the intraday chart, we have this key level of supply, and let me just show it to you. So you do have this this area over here, and let's go maybe to a 10-minute chart to just fine tune onto this area here. So somewhere around the 5 minutes. So this is an area to watch out for. It's a little way above the current market price, but it's a pretty clean area, and this is an area which is more or less within that entire daily supply zone, right? So there is a very likely possibility that if the markets do give a move to the upside, then we might see the markets moving again back into this area, and because everything is just pretty much tested over here, the markets might tend to move to a fresher level of supply and then retrace back from the levels above. So it's a long way to go up, but you never know. We might see a big fall coming in case if the markets do test this level in the days to come. All right, so let's move on, and let's have a look at the bank Nifty now, and let's see what the bank Nifty is telling us. So let's load the bank Nifty charts. Alright, and if you look at the bank Nifty charts, it's a very similar story. Bank Nifty has been the stronger of the index than the Nifty, and it is also showing a sign of bearishness right now. This is your monthly demand zone. We are into a key area of demand as well on the weekly. So very similarly as we are on the key area on the Nifty, we are also in the demand zone here. In case if this area gets violated, this area of supply is going to be very crucial, right? But we need to wait for this area to be removed for this supply zone to become a valid supply, right? So just keep a close watch on this level of demand. We might also move into a bit of a consolidation after such a big fall in the market, and markets might tend to consolidate in this tight range before the market eventually moves down or then retraces back to test the 43,000 odd levels and then give a correction to the downside. On the daily chart of the bank Nifty, we have new levels of supply, so I'm just going to mark them quickly for you. So just like how you have the daily supply zone on the Nifty, you have the daily supply zone on the bank Nifty as well, this drop area. Very similar looking levels on the bank Nifty, 43,048 to 43,638, and we do have this gap area of demand which is sitting right here right now, right? And in case if the markets do tend to break that level, then more or less we are going to go back to the origin that is this entire area of demand, which is not a very great looking area, but this is an area from where the markets have taken off and made a new high. If you look at the volatility levels on the options premiums, they are as of now deflated. But like I said, as when the market starts to move down, then your premiums are going to increase in value, and that is going to make the situation of option premiums expensive in the market. So right now, the most prudent thing to do in the market is to enter debit spreads or debit strategies in options. And if you're having a non-directional view, you can go with any kind of non-directional strategies such as calendars or diagonals in this kind of a market environment. Let's look at the Bank Nifty chart with an intraday perspective. And if you look at the Bank Nifty chart with an intraday perspective, we have seen levels on and off being tested and showing more of a bearish momentum than any kind of sign of reversal. Right. So now we do have this area of supply which is in play. So this is right inside that daily supply zone. So this is an area to watch out for the Bank Nifty. This is from the price point which is closer to the round number of 43,000, and I do have a preference of round numbers because I do believe that there are big reversals from these round numbers, and more or less if you have a supply zone or a demand zone lined up within those round numbers, then it's even more likely that these zones will play out even better. Right, there is no clear level of supply anywhere. We are at 41,663 now, so market will have to really rally to the upside to retest back these levels. But then if it does, then we would expect to see a further fall in the market. Right now, what I believe is what the market is doing is it is going down and down and down, and it is probably testing or retesting all the key levels of demand, and prices are eating up a lot of demand. So if prices do tend to bounce from any level of demand and turn from a key level of supply, then markets are poised for an even bigger fall. So we got to be a little careful right now, and if you just go a little further below, and there is a level of demand sitting right over here, which is this area, and this is that base rally. The demand zone looks a little far away from the current market price. It might look that it has been tested once, but this is an area to watch out for, and if the market just starts significantly falling down, then we might see this area sooner or later tested. So key levels to watch out for on the intraday time frames: 15-minute chart, 42,989, closer to the 43,000 round number, and 40,600, which is again closer to the 40,600 round number. So these are key areas to watch out for on the Bank Nifty. Now let's move on to the USD INR, and let us see if we can gauge something from the USD INR. So a couple of weeks back, I was talking about the USD INR, and I did mention an important point that generally when the USD INR tends to move up, our markets tend to move down. And that is exactly that has happened on the USD INR. Although you may not see a very large movement on the USD INR because the USD INR tends to move comparatively way too slowly than the other markets. But we do have this level of demand intact on the USD INR. And unless and until this demand zone breaks, things are not going to be looking good for the Nifty, the Bank Nifty, and the Sensex, because at any given point in time, if the markets do correct all the way down towards this area, then we might expect to see a big bounce coming in the USD INR, which means that the Nifty, the Bank Nifty might likely to correct even a little bit more. Right. So let's move on to the weekly chart. So if you look at the weekly chart of the USD INR, right now we are sitting in this tested area of supply, and we are also into this area of supply on the daily chart, which is a little bit of a mess right now. But in case if the market does tend to break out of this area, then we might see a little bit of a deeper correction in the Nifty and the Bank Nifty as well. If you look at the volatility analysis on the charts here, so volatility has significantly fallen from the higher sections to the lower sections, which means that the premiums on the USD INR are also now deflated, and they are cheap, which means any options traders who want to plan trades in the USD INR should be ideally planning any kind of debit spreads, calendars, or diagonals. in the current scenario. Let's look at the intraday time frame to see if there are any key levels of demand to watch out for on the intraday chart. So on the intraday chart, within this entire range, right now we do have this this gap level over here, which is sitting right below all this price consolidation, and this is going to be a key level to watch out for. So if in case the market does pull down 82.34 to 82.24, there is no level of supply, so I'm not marking any supply zones on the USD INR, but 82.35 to 82.24 will be a key area to watch out for. Let's now have a look at the stock heat map to say so, and here you can clearly see everything is said by looking at this diagram here, where all the stocks of the Nifty 50 are in red. There's not a single stock besides Titan which just closed flat, that is indicating any kind of strength in this market, right? So markets seem to be in a short-term bearish mode. So these are all going to be opportunities in case if there are any retracements back to supply zones. They might be good shorting opportunities on majority of these Nifty 50 stocks. Now I did want to invest some time on the open interest stats, since this is the last week of the month. So this is going to be a crucial month. We are then entering into a new year. But these are the key levels. So let's have a quick look at the open interest levels on the Nifty. And if you can clearly see that this is the 29 December expiry. It's been a day of call writers, isn't it? I mean, you can clearly see from this entire chart how the call writers have completely dominated this week expiry, right? So we see the highest open interest on the 18,000 strike price, and we see the highest open interest at 17,500. We do have a open interest close to around 17,800, but taking into consideration how the markets are heading and where they are heading, it's more likely that the markets will tend to be playing a 500 point range more than anything else on the Nifty. So based on the open interest data, 17,500 to 18,000 levels are going to be key levels on the Nifty. Any break above these levels will take the Nifty up to 18,200 once again. So based on open interest, these are the stats. Let's quickly have a look at Bank Nifty. And on the Bank Nifty, we have the highest open interest, very, very similar to the Nifty. You can see these big towers of call writers. So call writers have dominated. We are hardly seeing any kind of put writing happening over here. So call writers have completely dominated. 43,000 level is a key level of resistance. And on the put side, you have 40,000. So in fact, Bank Nifty is looking a little bit more bearish, but we do have this key level, which is the 41,500 area. And this is an area to watch out for in the coming trading sessions. If you line up these levels with key areas of demand and supply, they are more or less likely to give you better opportunities in your trading and your investing analysis. The sector for this week is the Nifty auto sector. So let's discuss the auto sector. If you look at the monthly chart, we are seeing more or less a bearish formation on the monthly chart. If you look at the weekly chart, since this week has closed, we can go ahead and plot this area as an area of supply. We do have this area of demand on the weekly chart, which is more or less likely to get tested in case if the markets keep falling. And this is going to be a key area to watch out for. Still further away from the current market price, but 11,893 to 11,536 is an area to watch out for. So now how do you correlate this? So basically, when a sector is in supply, you want to see a weak stock from the same sector also entering a supply zone. And similarly, when you see a level of demand, you want to see a strong stock within a particular sector entering a level of demand. So if you do enter using market timing, based on the sector and the stock analysis, then there is obviously a higher probability chance for you to gauge your trade correctly. So if you look at the daily chart now, this is your level on the daily. This is how it looks. This is more or less that weekly level, which is now plotted on the daily chart itself. And if you want to fine tune the supply zone a little bit more on the daily chart, you can possibly do it this way. And then you can correlate this supply with the Nifty supply and the Bank Nifty supply. Now let's move on to a specific stock from the auto sector. Let's go to Ashok Leyland. And let's quickly have a look at Ashok Leyland. We'll also have a look at Tata Motors. So we'll analyze both these stocks and we will try to see where are the key levels of Ashok Leyland. Let's remove all the tools. So this is the Ashok Leyland 75-minute chart, and if you closely observe that within all this consolidation over here, we are having one key level of demand sitting right here, right? Now, although the auto sector is looking a little bit more bearish on the chart, this is where exactly the prices of Ashok Leyland have come into this area. So at this point in time, because this is a 75-minute level of demand, and if we do get to see a bounce, we would expect to see the prices rising here. But in case if Ashok Leyland doesn't happen to give us a bounce because of the markets, and markets tend to become weak, then any break in this area of supply will possibly pull down Ashok Leyland all the way down towards this area of demand over here. So this drop based rally is from 115 to 112. So this is a key area of demand on Ashok Leyland. Let's look at Tata Motors. And if you look at the Tata Motors chart, Tata Motors is breaking down more or less. It's looking very, very weak right now. So the key levels of supply on Tata Motors are sitting right here. So let me just quickly show it to you. Let's move on to the 75-minute chart. So we do have this area of supply, which is an area from where Tata Motors has gapped down and has gapped down significantly. So it's 391 to 397. So if the markets do give a pullback, this is an area to watch out for. We would expect the prices to hit this area and then start falling down on Tata Motors. Alright, so here are the key levels of demand and supply. I hope just like every week you enjoyed our analysis. If you do like our analysis, please do mention in the comments what you particularly liked about our analysis. Once again, wishing you all a very, very Merry Christmas and Happy New Year. And may all your trades be green for the next year. Looking forward to see you for the next week's analysis. Till then, take care. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.